Terra Firma has been an innovative force in private equity for 20 years. In that time, it's acquired and transformed businesses with an aggregate value of over 48 billion euros. The focus has always been on securing the best value for investors from these investments and returning money to them.
We've just come out of one of our most successful 3-year periods in terms of the amount of capital that we've returned back to our investors and also the profits that we've generated for them. And as I think most people are aware, we are one of the largest investors in our funds, and therefore we've benefited at the same time as our investors have. We've actually got at our disposal almost €1 billion to invest, and that really does put us in a great position in terms of being able to capitalise on the opportunities that we see out there.
While it's been creating and realising value in its existing portfolio, Terra Firma has been developing a strategy to meet investors' ambitions for higher returns than they've recently been getting from the private equity industry. The focus will continue to be on asset-backed businesses that require fundamental change. But Terra Firma will be taking a more flexible approach, investing directly in some opportunities and co-investing in others.
We've got $1 billion of capital we can invest, effectively our own balance sheet. That means that we can go back to our roots and we can be very opportunistic, very entrepreneurial, and we can really drive forward to gain alpha wherever possible for both ourselves and our investors.
Terra Firma's return to its entrepreneurial creative roots has been evident in its most recent acquisitions. For example, Yvale, the garden centre group it acquired in 2012, has been rapidly transformed.
So this was a multi-site business, underperforming. It had been underinvested by its previous owners. It was lacking in strategic direction. So when we looked at that business, we could see loads of opportunity to improve its performance. Let's start first with the strategy. Let's get the right management team in there, and then push with pace to really execute that strategy and deliver results. And we've achieved that, moving EBITDA from £28 million in our first partial year of ownership to just over £56 million at the end of 2014, just 2 years later.
And Terra Firma has been equally innovative in realising value in the businesses it's held over the longer term, like AWOS, the aircraft lessor.
We had our core business in the leasing, the technical management, the credit and risk management of mid-life aircraft. But we also had this portfolio of new aircraft, primarily from our pipeline deliveries, but they were relatively low yielding for us. So we felt that there was a potential arbitrage to split the portfolio into two. So we undertook that split, and we undertook a transaction to do a 90 aircraft portfolio sale to Macquarie Bank. We think it's at a very good price for ourselves, and I think it therefore sets up the residual business to be in a very strong position going forwards as we look to do the eventual exit of the entire business.
Going forward, Terra Firma is looking at the kind of businesses that are most likely to respond to its core strengths, its ability to see and realise hidden value and potential. Meanwhile, Terra Firma will continue to manage its existing funds, with a view to exiting from a number of portfolio businesses in the near future. This will free up further resources to pursue its new investment focus.
Going forward, it's going to be really exciting. We're going to continue to use the skills we've developed over the last 20 years, but we're going to use them in a more focused, more entrepreneurial way. As one investor said to me, what we want from you is the best of Terra Firma, not the average Terra Firma. And that's what we're looking forward to delivering over the next 20 years.